$750 million. That's what Ripple just spent buying back its own shares at a $50 billion valuation. Meanwhile, XRP is down 62% from its peak, and 60% of holders are underwater. So who exactly is winning here? Plus, XRPL's tokenized assets just exploded 920% to 1.14 billion, but 86% of that belongs to 12 wallets. Mastercard just assembled 85 crypto firms into a payments alliance, and Ondo crossed 1 billion in tokenized stocks. Except you don't actually own any stock. Yeah, let's get into it. So Ripple just launched a $750 million share buyback, valuing the company at $50 billion. That's a 25% premium over the $40 billion round from November. The tender offer runs through April and lets investors and employees sell shares back to Ripple. And this isn't Ripple's first rodeo. They tried a $1 billion buyback at $40 billion in September, but holders refused to sell. They were betting on higher valuations. So Ripple came back with a sweetened deal. In the November round, led by Fortress Investment Group and Citadel Securities, with Pantera, Galaxy Digital, Brevin Howard, and Marshall Wace. But here's the part Bloomberg buried in the fine print. Those investors got a guaranteed 10% annualized return, a put option. Wall Street hedged its crypto bet with training wheels. And Bloomberg also reported that investors concluded 90% of Ripple's net asset value is tied to XRP. So the $50 billion valuation is basically a $50 billion bet on XRP's future price. But XRP holders don't get a cut of any of this. XRP is legally classified as a non-security. No dividends, no buyback proceeds, no governance rights. The Crypto Basic put it bluntly, quote, "Holding XRP means funding a company that prioritizes its equity shareholders over you." And 200 million XRP, worth $280 million, was transferred internally on March 5th, 6 days before the buyback was announced. Now, that doesn't prove anything, but it raises questions about where the funding comes from. Brad Garlinghouse says XRP is, quote, "the North Star for Ripple." He wants Ripple to be the first trillion-dollar crypto company. No near-term IPO plans. But Goldman Sachs just disclosed a $153.8 million position across spot XRP ETFs. Cumulative inflows hit 1.44 billion. The institutions are in. The question is, are they in for Ripple's equity or for XRP? Because right now, those are two very different bets. Now from Ripple's corporate treasury to what's actually happening on the XRP ledger, and the numbers are wild. Tokenized assets on XRPL went from 111 million at the start of the year to 1.14 billion, 927% in less than 3 months. XRPL now holds 15% of all global tokenized commodities, second only to Ethereum. Daily payments hit 2.7 million, a 12-month high, up 170% from mid-2025. Nearly 27,000 active AMM pools. RLUSD hit 1.56 billion in market cap, on track to hit 2 billion within weeks. Third largest US regulated stablecoin. Integrated with LMAX Group, BlackRock Biddle, Deutsche Bank, SBI Japan, and Binance. So everything is up and to the right, right? Well, let's look at who actually owns this 1.14 billion. JMWH by Just Token, $861 million in tokenized megawatt hours of Latin American energy. Sounds massive, except it has 12 holders. 12. And those tokens are uploaded for tracking purposes. They're not actively traded. Then Control-Alt Diamonds, 279 million in tokenized diamonds held in the UAE. The motley fool called the growth quote base effects from a single large issuance. And the XRP price paradox continues. XRP sits at $1.37, down 62% from its peak, down 26% year to date. CoinDesk called it, quote, every metric that should matter for a utility token is up, but the price is down. 3 reasons. First, XRP is used as a bridge for about 3 seconds per transaction. Activity, not demand. Second, RLUSD flows through XRPL without requiring anyone to hold XRP. Ripple's own stablecoin may be cannibalizing XRP's utility. And third, DeFi TVL on XRPL is $47 million on an $84 billion market cap chain. That's 0.06%. Solana is at 20%. But there's a wild card. Evernorth, a NASDAQ-bound XRP treasury firm, holds 388 million XRP with over $1 billion in capital commitments from Ripple, SBI, Pantera, and Kraken. The MicroStrategy of XRP. David Schwartz's take? Quote, no benefit from their direct impact, but I think those things can sometimes have massive indirect impacts. The ledger is growing. Whether the token captures any of it, still an open question. On March 11th, Mastercard launched what might be the largest crypto alliance ever assembled. 85 plus firms, including Stellar, Ripple, Circle, Binance, PayPal, Paxos, Kraken, OKX, Gemini, MetaMask, SoFi, Solana, Polygon, even Tron. Basically, if you're in crypto and you matter, you're on this list. But here's the honest question. What does this actually do? Mastercard calls it a, quote, structured collaboration framework for meaningful dialogue. Not a product launch, a forum for dialogue. Skeptics will call it a logo wall, and they're not entirely wrong. Changes arrive gradually, market by market, as individual partners ship products. Both Visa and Mastercard executives have openly admitted they see, quote, little current product market fit for stablecoins in everyday consumer payments. But context matters. This builds on real infrastructure. Mastercard's crypto credential is already live in 13 countries since May 2024. SoFi just enabled SoFi USD as a settlement option across Mastercard's network, the first stablecoin from a U.S. nationally chartered bank on a public blockchain. And Visa currently holds a 9-to-1 volume advantage over Mastercard in crypto card transactions. So this move may be defensive, keeping digital asset activity on Mastercard's rails before on-chain payments bypass card networks entirely. But the real stellar story isn't the Mastercard program. It's the DTCC patent. Patent number US 2025-0078162A1. The Depository Trust and Clearing Corporation, which processes virtually every U.S. securities trade, named XLM and XRP as designated, quote, digital liquidity tokens for cross-ledger settlement. DTC plans to launch its tokenization service second half of this year, bringing stocks, ETFs, and fixed income securities onto blockchain. And Stellar's march has been stacked. Protocol 25, The X-ray upgrade went live January 22nd with zero knowledge proof privacy features. Societe Generale deployed its EURCV Euro stablecoin on Stellar on March 10th, now live on 4 blockchains. Franklin Templeton has $580 million in tokenized U.S. Treasuries on Stellar, and Stellar processed 3.6 billion transactions in 2025 with 99.99% uptime at an average fee of $0.0007 per operation. XLM is at 16 cents. The sleeping giant narrative continues. And now the story that brings it all together. Tokenized equities just crossed $1 billion for the first time, and Ondo Finance owns 58% of that market. Total TVL across Ondo's products, over 2.5 billion. Ondo Global Markets alone, 500 million in TVL and 11 billion in cumulative trading volume in less than 6 months. On March 3rd, Abu Dhabi's global market approved Ondo's tokenized stocks for trading on Binance's regulated platform. First time the ADGM approved tokenized securities trading. Amazon, Apple, Nvidia, Tesla, Meta, Microsoft, Invesco QQQ, available to non-US users on Binance. Ian DeBode, Ondo's president, said, quote, "We are expanding access to hundreds of millions of investors. And the expansion is everywhere. MetaMask integrated Ondo in February. 200 plus tokenized US securities directly in a self-custodial wallet. They launched on Solana in January, becoming the largest RWA issuer on that chain at 65% of all Solana RWAs. And Ondo filed a confidential registration statement with the SEC, which would make them the first issuer of transferable tokenized stocks under SEC reporting requirements. But here's the part nobody reads. Ondo's products are equity-linked notes, not actual shares. The disclaimer says, and I'm quoting directly, "The tokens are not themselves stocks or ETFs, and they do not provide their holders with rights to hold or receive their respective underlying assets. No voting rights, no direct dividends. You get economic exposure to the price movements, but you don't own the stock. And remember, total tokenized equities are at $1 billion. The traditional equity market is worth $126 trillion. That's a ratio of 0.0008%. Plus, only 11.8% of RWA-backed stablecoin supply is deployed in DeFi. 88% sits idle behind KYC walls. The infrastructure is everywhere. The actual usage is a rounding error. But Ondo's Ondo token is at 26 cents, down 45% from January highs, despite every headline being positive. Sound familiar? Infrastructure up, token down. It's the pattern of 2026. So let's step back. Ripple valued itself at $50 billion and bought back $750 million in shares, while XRP holders got nothing. XRPL's tokenized assets hit $1.14 billion, but 12 wallets own most of it. Mastercard assembled 85 crypto firms and Stellar landed in a DTCC patent, but the program is a dialogue form. And Ondo crossed $1 billion in tokenized stocks, but you don't actually own stock. The infrastructure build-out is accelerating at every single layer. Corporate treasuries, payment rails, tokenized securities. But the gap between what's being built and who actually benefits keeps getting wider. That gap is the story of 2026. If this breakdown helped you see through the headlines, smash that subscribe button. Drop a comment. Should Ripple be buying back shares while XRP is down 62%? I read everyone. See you in the next one.